Hello and welcome to The Hash. I'm Zach Seward. You're joining us to talk about the latest in crypto news, and we thank you for that. So let's do this thing. All right, Naomi, you're in the studio today. So first of all, how's it going? How is
It's going great. It's so nice here, guys. I can't wait for the day when we're all here in the studio hanging out and I'm cutting Will off in person. Like, it'll be so good.
Will that day ever come? I don't know.
It will. I believe in it. I believe in it. But let's go straight to the first story. So an interesting article came out in the Wall Street Journal where they're saying that financial advisors are pitching Bitcoin to investors to offset portfolio losses. So the way this works is that if you get a capital gains increase in stocks or bonds or whatever, you can actually use the volatility of crypto in order to mitigate the capital gains that you would have to pay. So what these firms are doing is if cryptocurrencies fall by a certain amount, then the accounts are automatically set to sell the digital coins. They generate a taxable loss that can be used to offset other investment gains. And the accounts then buy the coins back in a short time for around the same price or even less. It's kind of an interesting maneuver because this is something that you actually can't do with traditional bonds and stocks because there's something called a wash sale rule, which basically prohibits this. There are certain securities laws around this. Now, these laws apply to stocks, bonds, options, other securities, and the idea is that there are restrictions on capital loss deductions when investors purchase an asset within 30 days of selling it for a loss. But cryptocurrencies actually evade this rule because they're considered property by the IRS. Now, this may be changing when things change on January 1st. There's new laws going through, and so unfortunately this rule may not be in existence for very much longer, but it's kind of an interesting play there and could explain why a lot of institutional investors are getting into Bitcoin. But Zach, I saw your hand go up, so I'll throw to you.
That is some sneaky stuff. That is real clever. Thank you, Financial Advisors of America. That better be some leaked alpha, by the way, at CoinDesk Bitcoin for Advisors event, which is coming up this week. Look at that seamless plug. But it's interesting to see financial advisors approaching this differently and with a different set of different set of a vision as to how institutional investors and the deep pocketed should be approaching this stuff. Cool to see it. Clever. And I wonder if that loophole will indeed close, but I will toss it to Jen.
Yeah, I'm going to talk our audience through one of the examples that was in the article. So the article talked about a client who bought $100,000 of Bitcoin and Ether. Then they set the amount to harvest losses when the ETH slipped when either slipped 5%. Sorry. Then he racked up $30,000 in losses, which he used to offset the gains on his stocks, and he still gained 10% on his crypto investment. So for me, this is just, the rich getting richer. And I mean, we hear stories about how crypto is able to help the rich get richer. But I think this, again, brings us so far away from the financial freedom and financial equity that we speak about so much on the show when it comes to crypto. I don't think this loophole is going to be around for much longer. So we'll see how many more people get to take advantage of it before it goes away.
I'll push back on that a little bit, Jen. I don't see this as being necessarily just for rich people. Anyone can take advantage of this. If you wanted to take advantage of this, if anyone on this show wants to take advantage, if anyone watching wanted to take advantage of this, they absolutely can. I mean, this article is really selling managed accounts as being the way to do this, which I would also push back on because they're charging a fee for all of this. This is something you can just be literally doing in whatever account, whatever exchange you're using to trade cryptocurrency. Yeah, no, I mean, like if you have any sort of investment, if you're in Robinhood and you're making money, and you're getting capital gains taxes because of money you're making, you can actually use these crypto rules to offset some of those. So this isn't just for rich people at all. In fact, the new laws that are going through at the start of next year will actually make it more just for rich people. The fact that cryptocurrencies are increasingly being considered securities and treated as all other securities under securities law, that is going to make it so that we erect these barriers, financial barriers for people. So it's like once you have these financial barriers in place that mean that only accredited investors can invest in certain types of securities, I mean, that's when you get this really unequal playing field. But as it currently stands, this is a loophole that's open to anyone who wants to take advantage of it. But Zach, I saw your hand go up.
I always think about this stuff when there's all these increasingly exotic ETF products, especially in Europe. There's a Polkadot ETF and there's a Cardano ETF. And you can just ape into these coins like themselves, right? But it comes down to sort of like different strokes for different folks, right? Different risk tolerance profiles. Hey, I want exposure to the upside, but I don't want to hold these tokens themselves. And that's attractive to some people. That's the context in which these Bitcoin ETF conversations take place. But the beauty of crypto is that this is open to non-accredited investors, right? Like if you're smart enough and you do your own research and you're able to sort of like, get in when you get in, there's nothing that's prohibiting you from realizing the gains or losses that a more quote unquote sophisticated investor with a financial advisor can themselves. So there is something nicely democratic about these markets, even in all their insanity and chaos. I'll toss it to you, Will.
Yeah, I won't say I'm the most familiar with this topic in general, but I am wondering if loopholes like this, that they're calling loopholes, even if they are or not, whatever, I think it does. Like, does it bring more speculation or more regulatory ire to like this whole industry? Just because like you see the ability to get out of some of your capital gains taxes, and we all know that regulators, they want to collect those taxes. Like that's how they put money in their own pockets. And so when they're looking at this and they see the cryptocurrency industry is operating on its own wavelength as opposed to the securities market, do things like this kind of cause both systems to sort of align over time? And that's why you're seeing like on January 1, this might not be a thing anymore. It's interesting to see this also like be brought up in the Wall Street Journal, where you have like a mix of a lot of different generations looking at this market. Wall Street Journal famously still issues a copy in paper. Why do they do that? Because they have an older readership and they're slowly getting interested in crypto. And that's where you kind of see like that thread being pulled through. Older generations typically are more interested in securities. Well, now you have this interesting crypto thread mixed in there as well. I think it's just going to draw more regulators into the mix in general. But I mean, on the whole, that's a good thing for crypto, just to kind of step back. It's good to see like more people kind of interested in the whole market. Naomi, I'll throw it back to you though.
Yeah, I mean, I think that it's very interesting if you guys are out there trading and you're getting capital gains. I mean, this is something that it's smart to research and figure out what these things are. I wouldn't call them loopholes. I'd say this is exactly how the system is designed. So I think that it's smart for people to research this stuff and find out how you too can benefit. Don't just kind of say, well, this is only for other people. This is for people other than me. It's like, well, no, actually, it's available to you too. I recommend that you research this stuff and figure out how to play the same game that everyone else is benefiting from. But let's change track here. Zach, I'm going to throw to you for the next
I'm going to intercept that.
Zach, one of the quick takes.
All right, Zach, I'm throwing it back to you.
Swat that pass. It's all mine. It's mine, all mine. All right, well, this was a great topic. For real, though, October 6th, Bitcoin for advisors. This is where you learn some of these tricks of the trade, okay? This is a good event. It's on Wednesday. Bitcoin for Advisors by CoinDesk. Check that thing out. Okay, Will, I'm passing it back down to you. You ready? Go.
Love it. Love it. Actually, perfect segue. So great job, Control. Way to set that up. We're going to talk about the SEC's decisions on Bitcoin ETFs. So this was, according to last week, October 1st, this was published. But it's still very important to note how this ETF market works for Bitcoin, because a lot of people think this is going to be a reason that Bitcoin either goes up a lot or goes down a lot, depending on how the SEC kind of walks through these ETF applications. So the SEC gave notice on Wednesday that is extending the initial review period for up to 45 to 60 days for 4 separate ETF products. 3 of those ETF products are for spot Bitcoin and 1 is for futures Bitcoin. So how these ETFs work is kind of like you'd be able to trade Bitcoin as a security, and then one of these would be like Bitcoin futures as a security. Some noted context here is Gary Gensler, who heads the SEC now, has said in the past that he's more favorable towards a Bitcoin ETF that's based on Bitcoin futures and not Bitcoin spot. Historically, most of the SEC's scrutiny against Bitcoin ETFs has just been because of claims of market manipulation, very vague rules. And we've seen these extensions time over the last few years. But many people are hopeful that this time around, we could see it go through and then maybe some resulting price action. Zach, I want to throw this one to you. I'm going to be honest, I had no idea whose hand went up. So you can also claim it.
I'll take it. Can I get the story page again? Control. Can I get this story page? I just want to look at this headline real quick. Control. It's coming. It's happening.
Oh my God.
Okay. Yes.
Look at that.
All right. Yo, I just want to say this headline could have run at any time in the last, 5 years, right? Same story, different day.
Totally.
The SEC has been so hesitant to approve a Bitcoin ETF for U.S. investors that it's getting a bit silly at this point. Okay, I'm over it. Thanks, Control. You can put us back on. Thanks so much. Sorry for being insufferable. Anyway, I wanted to riff on that for a hot minute because it really is getting to the point of being comical. And I think, we saw with the VaynerX Bitcoin ETF proposal that was punted toward November 14th. By law, this would be a drop-dead deadline for some sort of clarity on whether or not this will or will not move forward. So I think we're coming up on Bitcoin ETF season in a major way. And I don't know, I think it's an interesting question. I mean, Naomi, do you think Bitcoin ETFs are bullish for the space or bearish? I mean, I think there's differing perspectives on whether or not this would be good news or bad from sort of the crypto diehards.
I think anything that spreads exposure to this is good. I mean, it's not actual Bitcoin. We have to remember that. But some of these may potentially be settled in the asset itself. So I think all of this at the end of the day is helping exposure into the asset. But also I wanted to just add on to something that Will brought up earlier, where he said that Gensler is repeatedly suggested that he's more likely to approve a Bitcoin futures ETF rather than a Bitcoin ETF that's invested in spot Bitcoin. And I mean, the reason why this might be, I'm not quite sure, for certain, but it seems that because you don't have to think about custody issues for futures the same way that you would have to think about what constitutes your SEC approved secure storage for the actual Bitcoin asset. So it does seem that, futures would be an easier thing to figure out. Only one of the ETFs that have been put forward is actually linked to the futures market rather than Bitcoin itself, and that's Valkyrie. So I wonder whether there's more chance that one is going to be approved. At the moment, we have CBOT, which I believe are asset settled, and it's the only one. Everything else, I think, for futures is cash settled. CME, I believe, is cash settled. Most futures are cash settled. So that's where I think Gensler is coming from when he makes that comment. And so we'll see whether, when this verdict comes out, if it's not pushed back again or completely denied. And as Zach said, it just keeps happening over and over that these things just don't get approved, and then the deadline gets pushed. But we'll see what happens and whether Valkyrie ends up being the winner here. But Will, I saw your hand as well.
Yeah, so it's always sports betting season, right? Because the NFL's up and running, so is NBA. So we're going to look at some sports bets for what Bloomberg thinks about these approvals going through. So according to Bloomberg Intelligence, they're saying that ProShares Bitcoin ETF has a 2-to-1 odds of being approved. Invesco's is 9-to-1. VaynerX is 20-to-1. Valkyrie is 5-to-1. And Galaxy's 50-to-1. So those are pretty good odds. You're looking like 2-to-1, you're getting there. You're doing pretty good. And so I think that we could see some of these go through at least by maybe before that period or by December or January 1, which I think would be pretty big for the Bitcoin space. I saw some others commenting saying you have outside exposure to Bitcoin at this point. Most people are familiar with Coinbase, or they can hold Coin, the stock, or like Zach said earlier, there's ETFs on other markets. If you open some sort of trading account in Canada or Switzerland or whatnot, you can get exposure to crypto assets writ large. So maybe it's not going to be the 100K push that a lot of people are hoping for, but I think opening up Bitcoin to a larger market in the US through an exchange traded fund like this would be huge news. Zach, I'll throw it to you.
I just love the sports betting degen vibe you brought there. That was
really
huge. He did his homework,
impressed.
Man. That was massive.
I just saw a tweet this morning and I remembered it right now and I pulled it up.
So good. So good. Yeah, I heard from a ETF insider that it may be likely, or at least according to him, that multiple of these proposals get approved at the same time so as to minimize the appearance of the SEC choosing a winner in this marathon that is the Bitcoin ETF approval. All right, we're going to take a break. You guys cool with that? You guys all right with that? Cool? Break? Pause? Stand down? All right, let's do it. We're going to talk about NFTs. We're going to talk about NFTs on the flip side. A couple NFT stories coming up. Stick with us. It's The Hash. You rule. Thanks.
Assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Hello and welcome back to The Hash, where we bring you the latest and greatest in crypto and culture. All right, so today is October 4th, 2021, and this is the day where we are going to discuss how a doodle of an elephant by social media guru Gary V outsold Warhol, Pollock, Neel, and more at a Christie's auction. So I don't really know how to feel about this. Empathetic Elephant is the name of the piece. It went for $412,000. Well, $412,500, sorry. And the drawing was part of Gary V's inspiration behind his NFT collection. So, Zach, I'm going to throw this to you because you have such a fun tie-dye shirt that I feel like matches with the collection the most out of what anyone is wearing. What did you think when you read the story?
I just thought it was really funny. It really speaks to the excitement around these novel artistic expressions in the market today, right? We've seen a lot of NFTs go big time with Christie's and Sotheby's, and also on more crypto native platforms. And for this doodle, again, it's not the actual NFT, it's a doodle that was used to maybe get some NFTs going. For it to sell for what it did, I think is really quite fascinating. Kind of speaks to like just there's the doodle. There's the empathetic elephant. I love that. It's so good. It's so good. It sort of speaks to just like the amount of dumb money in the market right now. Like, I don't know if someone in crypto bought this, but like, I would not be surprised if someone in crypto bought this, not because of any money laundering concerns, but just because of the fact that there's a lot of money that's being sloshed around. And maybe some of those people who have realized some significant gains this year are looking to plow it in to the next big hot art thing. I'll toss it to you, Naomi. Curious for your thoughts.
Yeah, I'm wondering, I mean, we have this article that says it outsold all of these very, very famous artists. And I wonder if it's because all those artists are dead. You know, like Gary V is kind of the star of the moment. He's a big personality today. And it seems more genuine that you have something being put on sale that seems like it's coming directly from him. Like, NFTs are a little different from traditional artwork because you can have a genuine artifact that's like an original Picasso painting, and that goes for a lot of money. But you transfer that into an NFT. Well, that wasn't Picasso who transferred that into an NFT. That wasn't Warhol himself. That wasn't Neel or Pollock. These are someone else who's taking that work and putting it on chain. So it kind of has this, I don't know, this sense of being more artificial, not quite connected to that artist. Whereas Gary V, it's himself who's putting that on chain, who's doing this thing that's a digital art piece out there. So I wonder whether that's where this value differential is coming from. I'm not sure. Like, Will, what are your thoughts?
Wait, Naomi, can I just fact check you really quick?
Yeah.
So the art is actually just the drawing, and that drawing has inspired NFTs. So there's no NFT associated with this piece of art. It has inspired his NFT collection.
Did they pay in Ether?
So confusing.
Just consider the fact check. Like more fact checking here, please.
I'm not sure. I don't think they paid in Ether, but I don't have that solid answer for you.
So Gary V sold a doodle of an elephant at Christie's, and it outsold, but it was part of the basis for his NFT collection. Well, you go walk me through that, Jen. What is the connection between this doodle that was somehow sold at Christie's? Why was there a doodle of Gary V sold at Christie's? I can understand them getting on the NFT train, but you're going to have to walk me through this.
So I'm going to walk you through the best I can. His NFT collection is a collection of doodles that look very, very similar to Empathetic Elephant there. And he auctioned a collection of animal-inspired doodles. So I believe there were 5 in the Christie's auction, and then there were also pieces by Warhol and some of the artists that I mentioned in the intro. And it was solely to sell the inspiration behind his NFT collection, which has also sold for hundreds of thousands of dollars. I think the cheapest NFT in the collection right now is sitting at around $50,000. So this was really a move in the art world. And so after it happened, he tweeted, he said, "Consumer behavior shifts all the time. A simple history lesson will show you how many thought Jackson Pollock and many of his contemporaries were silly, not art, and much more." And so I don't know, maybe we're the dummies here. Maybe in years from now,